Welcome to Bar Charts Market on Close. I'm your host, John Rowland, Bar Chart Senior Market Strategist. And our show today, the tale of the tape. Where is the leadership of this market? What is the most valuable commodity, and how can we find some trading opportunities? Thomas and I are going to have a debate on Netflix. Is it tradable or investable? And finally, with the onset of a biblical winter storm and Arctic temperatures, I'm going to give you my take on natural gas. All of this plus your questions, and to help me along is Bar Chart's Twitter Tom and R Mr. X. Hello, Thomas.
Hello, John. How are you?
I am getting ready to go into like the Arctic burr.
I heard that. I heard you guys are having a tough time. For those not familiar, I'm traveling the world, and I always choose this time of the year, John, to specifically avoid these types of incidents. So I'm sorry you're going through it. I'm also happy not to be there.
Yeah, I think I saw, for just to let you know, in Chicago, I think the high is going to be like -20 tomorrow or something like that.
Well, I wish you guys all the best of luck.
Yeah, well, hopefully we'll survive.
All right. So just a quick reminder for those of you watching directly on our website, if you want to ask a question, just click ask a question at the top right. You'll see it in the orange color. If you're watching on YouTube or our other social channels, go ahead and ask your questions directly in the chat or the comments. And John and I will get to as many as possible. All right, John, we got a lot to cover today, so let's jump in. So the broader stock market, John, the indices, right? The S&P 500, the Dow, the NASDAQ, it feels still bullish. But if you look at the price action in the broader indices, they've kind of been stuck on struggle street for quite a while, kind of stuck in the mud, not really breaking out to those, new all-time highs, 7,000 and above that a lot of people sort of are expecting. What do you think is holding back the indices, John? Because I still see individual stocks performing quite well, but it doesn't seem to be translating to the broader market.
Yeah, let's kind of look at this. Let's kind of look at the tail of the tape on here. But, you know, maybe it's just that our perspective is muted, or or distorted. Because if you look at this, right, here's the S&P index. We have stacked upward moving averages. That's a positive. We're continuing to see a series of higher highs and higher lows, and that is expressed by, every time we get a small correction or a retracement in the market, is met by the dip programming. So, I mean, I think, looking at just that from this technical aspect, it's all engines ahead. Yeah, maybe there is a bit of lag in momentum, and if you look at this from a technical aspect, maybe my concerns would be, let's change our perspective here a little bit. Here is, the ADX, which is kind of a trend value. You can see the ADX has been trending lower. That is indicative of a trendless market. And the other thing that concerns me now is the negative DI is above the positive DI. Again, not a very strong sign. And if we look at, for instance, RSI, which is another momentum indicator, to your point, when we made all-time highs just recently, the RSI struggled to get above 60. And to me, again, that is another sign of weak price momentum. But, this is the kind of the charts that I want to buy, right? That are continuing to go from left to right up. So, it's difficult to say right now, maybe we're in a stall period because of a lot of other concerns. We talk about the wall of worry, geopolitical, domestic discord, fiscal responsibility, or the questioning of fiscal responsibility. And I think one or two things that I think really stand out to me is this kind of this meteoric rise that we've seen in the Japanese long rate. and that corresponding parabolic move in both the metals, gold and silver. These things don't happen in a vacuum, and there are capital flow consequences when you see these kind of extreme price um, movements. So again, I think the market is kind of taking a caution based on all these extraneous risks.
So, John, when you look at the market as it is right now, I mean, would you be looking to invest in some of these indices, the SPY, the Qs, or is there maybe better opportunities elsewhere that you're seeing?
Yeah, I mean, if we look at the Qs, I think you're going to see a similar story. Um, but again, I think the major difference between, let's say, the Qs and the S&P is that the Qs has stalled making new highs. So the question, or the answer to your question, is no. I'm not. I would not be adding or buying into this to this market right now. Matter of fact, since about third quarter, um, what I've been doing and what I've been cautioning about is that I've been concerned about the heavy weighting of a few stocks in these indexes, and what I've been trying to do is diversify my portfolio away from these large mega cap stocks and also these indexes. And I've been trying to find stocks that are, let's say, are in the mid cap or in the small cap, to take advantage of, let's say, what we've seen in recent months is some more positive market momentum. So here's the Russell 2000, and this is a lot more positive picture in terms of market momentum, and you can see how the Russell, since about the beginning of the year, has been outperforming the S&P. So this is where I'm kind of looking, or I have been adding to my positions in this space, right? The small and mid cap arena.
Yeah, I mean, small caps, John. I actually kind of gave up on small caps a while ago. I just got tired of waiting for them to make their move, but they are finally making their move. And correct me if I'm wrong, John, this is generally a pretty bullish sign for the overall economy, right?
Yeah, small companies are doing well. It's usually a good sign that the economy is doing well. And there is some market theory that says that in market cycles that financials and small caps tend to lead that first leg. And we've looked at Goldman Sachs and Goldman Sachs of the world, and financials have done really well in the last 6 months. So I think this is just an affirmation of what we've already talked about. And I think that's directly related to the perception that short-term interest rates are going to come down as well, right?
Yeah, absolutely. So within the small cap space, John, like let's say somebody doesn't want to trade IWM, maybe they're a stock picker like you are. Are there any specific opportunities within the small cap space that you're looking at?
Yeah, so recently we had an article that I contributed on, and this one in our market bar chart insight, which we looked at the AI picture, and this kind of this idea of picks and shovels, and this goes back to a discussion of a lot of these data centers that are being put in place. You're getting what is called the NIMBYs, or the not in my backyard. So starting to push back on these centers being built, and that there are concerns about negative economic and environmental impact. And so the CEO of Microsoft said that, hey, we're going to be, a better partner for you. We're gonna respect your concerns. And if you look in this article, he says that they're committed to job creation, responsible water usage, stable electricity prices, and so on and so on. So what I did was I said, okay, let's look in this space. Let's see if we can find some opportunities based on this concept that I want to find small or mid cap stocks, and I want to kind of deviate or get, diversify away from the indexes. And so in this article, we talk about, some of the different ETFs that are out there, water ETFs. And what I didn't want to do is I didn't want to just buy a water ETF, let's say of your local distributing company. I wanted to find companies who are increasing their sales, or their revenue is based on portable, recyclable, and waste management. And that was kind of the thesis of this article. And so the ETF that I found was this FIW. And again, if we look at this chart in relevance to what we call, we looked at the S&P, it has been underperforming the S&P for a while, but recently it has turned positive. Now, I would really like to see it break out above this 116 area, but it is in kind of range bound, and it does look like it is turning positive. But what we did is we broke down the constituents in this one, and so let me see, where is that? Okay, hang on, let's go back. Be patient with me, Thomas, here. So we went into the constituents and we look at them, and then I kind of did the Jim Van Meerten analysis, a chart of the day, and I wanted to look at those stocks that have 100% buy opinion, but also have a weighted alpha that is greater than the 52-week alpha. And you can see the two that are up here, Mueller Industries and Watts Water. So I invested a little bit in the ETF because I wanted this diversification. Notice that if we look at the stocks in this industry, there's not a lot of water stocks, so to speak, but they are the companies that are making the parts and the filters and the systems that are going to do this waste management or this recycling. And the one that I'm going to add a little bit more exposure to was this Watts Water one right here. Now, if we go to the chart, right, this to me is, again, a kind of chart that I want to own. And this is a weekly chart. Matter of fact, if we go back and look at this chart over, the last, let's say, 15 years, I wish I would have discovered this stock 15 years ago, Thomas.
Yeah, thanks a lot, John.
But again, this is a theme that we're kind of working on. So, if I go to and I bring this full circle here, so I go to the price overview of Watts Water Technology. It's a $10 billion stock or market cap. Now, again, how do we find a large mega or a large cap or a medium or small cap? But notice that here in the groupings, or if you look in the relatable ETFs, what we don't see is that we don't see Watts Water in the S&P 500 or the NASDAQ 100. But we do see it in the S&P 400, which is mid caps, and we do see it in the Russell 2000. So the point being is these are the types of stocks that I'm looking for that are devoid of the major indexes, because I think they're going through kind of a stall period, and I want to start finding that market leadership in the mid to small cap. Does that kind of make sense to you?
Yeah, absolutely, John. I think that makes a lot of sense. Yeah. All right. Well, let's jump from small caps to mega caps, John. And, we've talked about this before. Mega caps have been getting beat up, right? I mean, if your name is not Google or Amazon, you've really been taking it on the chin. But perhaps none has really gotten beat up worse than Netflix, John. And, we get questions from time to time on this stock, but we haven't done a full segment in quite a while. So now's the chance. Now, John, I've been posting about this. Netflix, obviously under its 200-day, but the margin that it's under its 200-day is the most in more than 3 years, which I think just speaks to investors are not buying what the company is selling right now, John. But what is your take on Netflix, and is this an opportunity maybe to start nibbling some shares?
Yeah, I think we have to ask ourselves, I mean, something that when you and I have our discussions in our planning meetings, one of the things you always say to me is that, I don't really care about the fundamentals of the company because all I need to do is look at the chart, and the chart's going to tell me what the market's perspective is, right? And that's kind of your feeling.
Yeah, absolutely.
So, what is the market is telling us? Well, I mean, if you look at this chart, the market is telling us it's not happy with Netflix. Why is it not happy with Netflix? Maybe it's this idea of the Paramount acquisition. They don't like that, or that you know recently we've seen that a lot of these um, subscription content providers have been under pressure. If you look at, let's say, Disney, that is another stock. Now, it is not as uh, dramatic as we see here in next week, and that's because I think Disney has a much wider range of income stream. But the point being is that maybe the market is looking at some of these subscription-based content providers and saying, "Hey, there's something that we don't think is the numbers are not working out." I don't know what that is. I don't know what that is driving, but all I can do is look at the price of the chart, right?
Yeah, I mean, I always say, right, price action tells the story, and right now you look at the price, and it's an ugly situation for Netflix. There's obviously a lot of drama with the Warner Brothers situation. Um, I guess the way I think about some of these things, John, Netflix is not going anywhere. Netflix is ingrained in our society, so I know it's not a going concern. My question, John, would be: I know we've said multiple times nothing happens, but nothing good happens below the 200-day. But is this just a case of it's gotten beat up so bad that it's worth nibbling on some shares? Because John, I remember Meta several years ago. I think 3 years ago. I mean, it was below 100. So if we had stuck to our sort of theory on nothing good happens below the 200-day, we would have missed out on that sort of bounce back. So is this a case where we might miss out on this bounce back if we don't buy now?
Well, I think the question is, we have to look at, is this tradable or is this investable? If I looked at this from a tradable, say to buy it on a tradable, you know, what we're doing is we're doing a contra trend buy here. And if I'm going to take a contra trend buy, I want to make sure that I get a good risk reward because I'm fighting the trend. So things like what a tool I might look at is Bollinger Bands. And yes, we are outside the Bollinger Bands, and it looks like we're going to go, maybe we'll snap back to the mean, but we do have this gap that is going to act as resistance until we do get up there. Now, maybe you might say, hey, we might snap from one band to the other, but that usually happens when the bands are wider, not necessarily when they're narrow like they are here. And, I want to look for trades that are going to give me 5-1. Now, let's say we can snap back to 90 and Netflix is trading around, $86. Well, that's a $4 profit. Can I get in for $1 worth of risk? And one of the tools that we have, or one of the templates that we have under bar chart templates, is our 13 EMA. And this is a really good way to kind of measure that risk. To me, there seems to be a lot more risk to the downside because of the downward trend. So I don't see a good risk reward ratio to take a contra trend trade. Okay, that's the tradable aspect of it. But let's go to the investable aspect, right? And so if my timeline is much longer, right? And to your point, is this a very buyable stock because of its historically cheap value? Well, yeah, I think if we look at that in terms of that aspect, currently we are bouncing off of where Netflix has bounced off before in the, multiple years, right? And going back to, let's say, January or December of 2025. But I like to find fresh areas. In other words, I like to find areas where the market has bounced once or maybe twice, but not the third time, right? And So I would still be reluctant on an investable side. I would be looking for, an area where I think there is untested retracement, and that to me would be down, around 74 to around 68. Now, do we get there? Only time will tell. Maybe this is all a part about that, that merger. But in terms of investing, I really want, and again, I'm going to stick to my guns. I really want to see a change in trend, or at least a change in character of trend. And I don't see that yet. So to me, I think to me, it's more of a patience story in terms of either waiting for it to go lower or waiting for a change in the characteristics of the trend action.
So there was a kind of a comment here. I know it's a little bit tongue in cheek. Something went down a lot is never a good reason to buy on its own. It depends. It depends. I mean, if you think it's a value play, if you think the market is just flat out wrong on how they're trading it, then it is. Then it could be a reason.
Well, we go back to that idea of, is the market resetting value, right? Or looking at subscription-based companies, and I mean, we're looking at trailing earnings here, but it's at 33%, where the S&P is right at 33. The S&P is at 23. So maybe what this market is just doing is just giving Netflix a little bit of a haircut, right? So that's why I'm saying, if I could get Netflix into the low 20s in terms of forward earnings, and I don't know what that is, but we can find that calculation out. But if I could get into, say, around 25, then I think that would be more investable and potentially also more tradable.
All right. Great segment there on Netflix, John. All right. So we started off the show, John, by talking about the freezing cold weather that you've got back home. And it is doing some kind of work, John, on natural gas, absolutely sending it to the moon. Now, we have an audience, John, that I think enjoys nat gas and trading nat gas. So, John, what do you think is going on here, and what do you think is going to happen from here? Because I'm sure some of us have investments in either nat gas stocks or some ETFs.
Yeah, it's really amazing that this week, because I was talking to you beforehand, that the spot month here, the nearby, is up 70% this week alone, and that's the largest price movement we've seen in 2 decades, since December of 2005. And you got to go back to the 90s, when I actually worked in the natural gas pits, to see that kind of a percentage move. But to me, I feel like this story, and I'm going to tell you what the things that behind the story, I'm kind of reporting a race that has already run, right? We're already, the market has already reacted to this frigid weather forecast that is going to come in across the United States. And when we look at natural gas, again, kind of a tongue-in-cheek thing, if you want to know what the weather is going to be in terms of temperature, just need to look at a natural gas chart, because it always looks about 10 to 15 days out into the future. So it's telling you, based on this week's price action, that the next 2 weeks is going to be a little bit on the cold side, obviously. But long-range models are saying that sometime around the first week of February, we're going to fall back to more normal or seasonable weather, which means that what we're probably seeing is probably the end of the move and not the beginning of the move. But there are some factors that could continue this price action. One of them being is that if we do get the sustainable cold weather, there is something that's called shut-ins with the wells of production in places like Texas and North Dakota will get frozen, and that will eliminate a lot of production, and that could create a scarcity. But this storm, this ice storm that's going to affect, from Dallas all the way to New York City, if we see some disruption in the electricity grid or the infrastructure, in other words, power lines going down, that historically actually is a negative impact to natural gas. Now, why is that? Well, that's because If you can't transmit electricity, then there's no need to burn natural gas to make to make electricity, and so natural gas starts to pile up, and that is actually a bearish factor. So, I don't know what's going to happen here. I mean, it's only time will tell based on the storm. But again, I think we have to be a little bit cautious about this volatility, because I really do feel that as price moves further, or as time moves further, then I think price will, settle down. Again, this is the February contract. If I change this to the March contract, and something that we talked about the last time we discussed this, is we're really at the end of the winter in terms of futures markets. And yes, the March contract had a big rally this week as well, not as high percentage wise, not as high as dollar value wise. It's only in around the upper $3 area. So the market is already discounting the future. And that's kind of my point, that maybe we've seen the end, or at least the final innings of this rally.
All right. Great segment there, John.
Let me add one more thing to this, because I know a lot of folks, I know we'll probably get a question on this one, is about BOIL. Do you want to do this real quick, Thomas? Can we do this?
Yeah, let's do it.
A little time. So one of the things you need to understand is anytime you trade one of these leverage ETFs, especially one that is related to a commodity, is that you have to understand that since that debacle that happened when oil prices went negative, ETFs now are continuing to roll forward. In other words, they're always moving to future contracts. And again, this idea that, they're already looking ahead. So the BOIL contract is basing its price action on the March contract, what I just showed you, which is dampened compared to the February contract because it's already rolled out of the February. And matter of fact, we've actually probably rolled already into April and May. So you're not going to get as big of price action on the BOIL because it is more reflective of those further contracts that don't get that greater volatility. Now, let me do this. Let me show you this. So here, let me turn on, this is the February contract, and you can see here's the February contract price. See how it's rocket shipped, right? But notice that the February contract, futures contract, right, the current nearby is well above this peak high that also relates to the peak high of BOIL. But BOIL is way down here. Why? Because BOIL is reflective of March, April, and May. And if we turn on that, then you see a more relatable response to the price action of that commodity. And so this is something that folks need to understand when they trade some of these these leveraged ETFs. And boy, you can really see it when I explain it and show it to you here in the chart, right?
Yeah, absolutely, John. All right. Well, good. We finished with about a minute to spare, John, which means we're going to have more time for questions.
Woohoo!
Guys, if you guys are watching on social media, as always, John and I would be super grateful if you share it, retweet it, leave a comment, tell us what you liked, tell us if any of these investments are in your portfolio. We're always super happy to hear from you guys. All right, John, first question, and I know you've got the answer on this one, John. Please explain the meteoric rise in gold.
I think this goes back to, I mean, again, we're just not understanding, or maybe it's just the chickens coming to roost, that you can't create $7 trillion of liquidity to prop up an economy during an epidemic without having some unintended consequences. And I just feel like this is the chickens coming to roost. But we've talked about this almost ad nauseum, that it's this idea that the dollar, which was the reserve currency of the world, is not the reserve currency of the world. What is the reserve currency of the world now, Thomas? Do you know?
I still think it's the dollar, right?
I think it's gold. Isn't the gold the largest one now, or is the
I think there's
second
some.
largest?
I think there's some debate, but it's either first or second.
Right. So this is this idea that individuals or central banks or sovereign wealth funds are, uh, moving away from the U.S. dollars, moving away from all fiat currencies, and looking to um, gold as a capital, capital flow, capital consequences into a really a currency, right?
Yeah, absolutely. And I know definitely treasuries, John. The global central bank ownership of gold has surpassed that of U.S. treasuries for the first time ever. So yeah, the dollar is slipping a little bit, and the gold is obviously becoming a more of a safe haven, at least in the minds of global
Right.
central
And if we look at gold, right? I think let's see where we were, probably still maybe in the February contract. We might be in the April contract, but here's just the futures market. We're knocking on that 5,000, which we thought was out of range at the beginning or at the end of last year, right? So I don't think this is over, right? But when it breaks, it's probably going to break hard. But I don't see anything that's going to cause that to break unless folks run out of dollars to spend, and I don't know if that's going to happen anytime soon.
And silver just crossed 100, guys, for those of you who are curious. And interestingly enough, John, I don't take investment advice from this person. Rich Dad Poor Dad, Robert Kiyosaki, he's been buying silver. He said he would buy it up to 100, and then after 100, he would stop buying. It doesn't mean it's going to crash. It just means he's going to personally stop buying, which I found interesting.
Yeah, look at the monthly nearby, but let me do the weekly nearby. I mean, that is historical. And you can't do something like this without something breaking or something that is broken. Again, maybe we will find out in the future, and then hindsight's 2020.
All right. Let's see what else we got here. Oh, this is a good one. So this person, this is in regards to our website. He sometimes sees a strong buy on bar chart opinion, and the bottom analyst view will say strong sell. So the bar chart opinion is based on technical indicators. The bottom signal is from Wall Street investment bankers. And John, personally, I don't put any weight whatsoever into what Wall Street rates a stock. They're doing it on the fundamentals, and they have all sorts of conflicts of interest. So I personally don't use that in the least.
Yeah, I think that's what folks get kind of confused. They think that we're becoming a market analysts, right? And that we're making a buy or sell recommendation. No, what we're just telling you is that we have these 13 technical indicators that we look at, and whatever the common interpretation is, in other words, price above or below them, above being a buy and below being a sell, is added up and then is given a valuation. And then that, if we get all 13, then that gives us a buy signal. There are many times where you might get a buy signal, or excuse me, a buy opinion on the bar chart indicators, but you might have analysts that say, it's a sell, right? Either for whatever fundamental reasons or earnings reasons, but maybe the market has shrugged that off. I'm sure you can go think of a lot of examples, and one that comes to my head is GameStop a couple of years ago, right? I'm sure that analysts around the world were saying that was a horrible stock, but yet if you looked at the technical indicators at one point, they're probably all 100% up, right?
Yeah, correct. Yeah. And I think
so that's just the difference.
Yeah, that comes down to whether you want to trade it or do you want to perhaps own it, but for the long haul. Right. All right. So we got a comment / question, John. One of our viewers says they bought some calls on an emerging market ETF, and they're curious if we're seeing any other interesting trends in emerging markets. And I think we are, John. We talked about this yesterday, right?
Yeah, that was one of the stories that we put in the back table. But here is an emerging. Here's the Vanguard emerging markets, and um, I don't know the hard numbers on this one, but again, this is a stock that looks, or ETF that looks eerily similar to the S&P. The only difference is that it is making new higher highs, and you can see on the comparative versus the S&P since about what it looks like about the beginning of the year, it is outperforming the S&P. Do you want to pick up on that one? Right?
Yeah, so I was looking at a different one, which was EEM, but EEM versus the S&P 500, largest outperformance since 2023, John. So, there's this idea of, whether people are selling, quote unquote, selling America. Well, if you look at this price action relative to the S&P 500, perhaps a little bit, or perhaps some rotation of capital into other parts of the world.
Yeah. Again, I think this is all that big ball of capital flow consequences that if you don't want dollars, if you don't want U.S. equities, money doesn't care who owns it. It's got to find some place to live, right, or the land. And it's been landing in gold, and it's been landing in many other stock markets or indexes around the world. I think I saw something that the Korean stock market is doubled in the last 6 months or something to that effect.
Yep, yep. It's been on a tear. Yep. All right. Let's see here. Where do you find the EMACD, John?
Where do I find it? Okay, so so there's a couple places. So first of all, go under investing, and you can see the EMACD buy signal. Okay. You can go into a chart, and here's Netflix. Let's go into a chart, and so I want to just kind of show you. You don't have to go into the indicators itself. If you go under bar chart templates, I'm pretty sure there it is. Yeah, EMACD plus volume. So you can find it there. And then if you go into standalone studies, I'm pretty sure you're going to find something that is called the exponential MACD oscillator. So 3 different spots.
All right. So this is a good comment here. I can get it to you. The debasement of the US dollar is the market trend. Need to invest in things that are inverse of the dollar. Well, so I agree that the dollar is being debased, but all fiat currencies around the world are being debased, right, John?
Mm-hmm. I don't think it's just relevant to which one you have exposure to, right?
Yeah.
I mean, you look at the yen, you look at some others. Now, there does seem did an analysis recently. It does seem like money is flowing into maybe the Swiss franc. Why? Which is many decades ago, Swiss franc was like a stable currency, but when they pulled the rug out, and those who were currency traders, when they depegged from the euro and created this huge disruption, it kind of lost its credibility, so to speak. But here's the dollar index. I mean, you could go to other currencies. I think the yen, for instance, is another one that has kind of looked really horrible. But yeah, I don't think it's just the dollar. I think it's all currencies, right?
Right. Which is why gold and silver and all precious metals have taken.
Exactly, right?
Yeah.
Money's got to find some place to land, and right, it could be in a currency, it could be a hard asset, it could be in a security, right?
We got a question on AMD, John. They just say that AMD chart looks positive. They're seeing some positive trends, and they were curious if you're seeing the same thing.
AMD,
Yeah,
advanced micro device, because I always get it confused because I'm always in ADM.
Yeah.
So, yeah. So I haven't looked at this one in a while. Let's see if I have anything. All right, so it looks like to be. I think we've talked about this one. It's actually funny. I think this is. I'm doing a Gap webinar on Wednesday, and looks like it was one of the examples that I might be using. But I think I remember this one now. It's starting to come back to me. It does look very positive. It has been in this upsloping channel. We're getting closer to the high end of the channel, which would give me a little bit of concern. But yeah, if you ask me, is this a bullish or bearish chart? I would say this is definitely a bullish chart, and it looks like it's making a new all-time highs. So yeah, no leg up.
John, how important are ratios when you're doing sector analysis? For example, GLD versus SPY, XLV versus SPY. Do you look at those ratios to see if things are out of whack?
Yeah, I mean, every once in a while, I'll look at them and maybe say, how might come to a ratio value that, I mean, sometimes they work, sometimes they won't. You know that how I felt about the gold silver ratio, and I totally got that one wrong. So, ratios and correlations come and go, and I think they're just kind of enhancements to technical analysis. But I certainly wouldn't make a decision or base all of my action based on a potential ratio.
John, do you buy into the notion of an AI bubble?
Yeah, I just feel like there's this, we talk about this rock being thrown into a pond, this disruptor. And what was that disruptor? Well, it was ChatGPT. And then the waves that go out, and then every iteration or derivative that next one. And we went from chips, and then we went to data centers, and then hardware and energy, and and now they're talking about look at a stock like Sundex, right? RAM, and then I just did an analysis on water, right? So I think that that ripple effect is continuing. There are some concerns about those folks that are in, the scientists and the programmers that are in the AI space that are saying that the large language models might be having some problems. They might be running out of data to consume, and that there are some concerns that, you hear things like what they call it slop, right? Or hallucinations, right? They're inaccurate. And that some individuals are saying that, how we're looking at the valuation of AI, right? You got all these companies that are chasing all this money. Excuse me. You think of look like a company like ChatGPT or, Anthropic, they have made investment commitments of close to $1 trillion over the next 10 years. And yet, they don't even have, they don't really have any income. So to me, this financing of, moving assets off of the balance sheets kind of reminds me of like the oil boom of the late 90s, early 2000s, which was very similar to what caused Enron. So I'm concerned about the potential bubble, and I see a lot of cracks in the bubble. But it's just so much money. It's just chasing alpha, chasing yield. That who knows? It just could continue to expand, right?
Yeah.
What is your thought on you? I know you kind of are really positive on the whole, right?
Do I think it's close? It's as close. I've heard these doomsday scenarios about AI replacing all these jobs and people just walking the streets being hungry and homeless. I don't believe those doomsday predictions. I don't think AI is anywhere close to being able to replicate the full potential of a human being, John. So is not being close to that, is that going to disappoint Wall Street investors? Maybe. Do I think it's going to be some sort of AI wipeout where all of this money is just completely zeroed out? I'm not sure about that. I don't necessarily agree with that.
Right. If you look at all the AI companies, right, I think Microsoft is the one that's spending the most. Again, the tail of the tape, the market is kind of telling us that it's the thrill is over, and now it's kind of the what have you done for me lately, right? Or what we used to say on the floor is you're only as good as your last fill. And so I think the market is kind of saying, all right, we've supported this idea of expansion and capital expenditures and all that, but now we need to see some returns, right? And I think that's kind of the point that I think a lot of folks are looking at right now. There's going to be a lot of winners, but I think there's going to be a lot of losers.
Yeah, agreed. All right, so we got one more question and then a comment, John, and then we'll wrap it up for the day. So this person says they looked away from solar companies when Trump was elected, but they've recently noticed that electricity demand is going to, or appears to, boost solar companies in the short term. Do you have any thoughts on solar, John?
Yeah, I had an article today, and I don't know if I can pull it up. Let's see. I just want to let me see if I can find it for you. Where, yeah, away from, let's see if there's this article is still here. News headlines. That even though, here it is, you can go under, again, under our bar chart insights. Even though Trump policies have kind of rolled back some of the green initiatives, as you can see here, that renewables, or this idea of AI, cannot exist without renewables. And renewables is one of the fastest growing sectors in the power space that is related to AI data centers. And yeah, I do think that solar is going to be, the kind of that sweet spot for growth. Now, there's a lot of solar companies around the world, and there's, obviously China is much farther ahead of us. I think there's something like they're putting up like something crazy, like a mile worth of solar panels every day, or something, huge like that. So there's TAN, I think, is one of the ETFs in here. We have clean energy. So there are some solar stocks in there. First Solar US, it's a US company that recently bought a competitor that now owns the supply chain from all the way from, literally the silicon that they use to make the chips all the way to, to the distributing. So, that's an expensive stock, but that one is a company so then this article, there's a lot of information about solar. There's a lot of information about this whole AI power play, and a lot of investment ideas. So that would be under the bar chart insight page, but you can see that we talk about a lot of different companies in this article. Is that good enough for you on that one?
I think that's good enough, John. So we got a request, John, for a future webinar from you on Wednesdays, and they would like for you to do another webinar on the basics of futures trading. Futures trading.
Okay.
I think it's been a while since we did a futures one, so that might be a good one to think about.
Yeah, we are planning to do that, so I will put that on my list. I'm looking at my ones that are list of ones that are coming up. So yeah, maybe we could do that. I will put that into the basket.
Perfect. All right, guys, that's going to wrap it up for today. John, great job as usual. See you back here next week, I think, huh?
Hopefully, yeah. We're on next week, right? Our schedule is always changing, but
assuming the Arctic blast doesn't knock your power out, John, over the next week or so, I think we'll be back.
Yeah, well, that'll be seen, right? Well, hopefully not. Hopefully not. I don't want to go back to the ice age. Folks, thank you for coming. Thomas and I appreciate your attendance. I hope that you guys like. If you're watching one of the social media channels, give us a thumbs up. Until next time, best of health, manage your risk, and the good of all trading.